All right, traders, welcome back. Hey, thank you for joining me. This is Ben Leto. We're doing some day trading today, so come on in. Um, got a big sale on my store, so visit my store.sbgtradingcorp.com. Yes, store.sbgtradingcorp.com. Check it out. We're going to be covering an old indicator that is pretty cool and unique in the NinjaTrader world, and it's a spread trading system. It's been on my site forever. I just haven't visited in a while, so we'll cover that. Also, guys, feel free to email me because I am opening up doors for my kind of my insider group. We're going to be a group of traders who are looking at developing new indicators, putting new ideas out in the market, implementing ideas that you have, maybe you've been using for a while. Let's get it coded. Let's create an indicator together. And also looking for your input on making the existing indicators and products better. So this is like our product advisory committee. So this is your opportunity to be part of that. You'll get a huge discount on products that are offered at store.sbgtradingcorp.com. You'll also get a huge discount on custom development. Yeah, if you want one of your own ideas coded in NinjaTrader, I'll do that for you at a big discount. These are only for a select few of you, so feel free to email me at sbgtradingcorp. Uh, sbgtradingcorp@gmail.com is one of my email addresses, or just post a comment here, this video, and we will get in touch with you. Oh my gosh, you know what? I need some music, guys. Let's get some music going. Where are we at here? And then we're going to take a look at charts. Let's look at some charts. That's what we all love to do as traders, right? Okay, where are we going here? All right, we got some music now. I'm gonna turn it down though because it's just too dang loud. All right, guys, you're awesome. Thank you. God bless you today. Thank you for joining me. Let's shift to charts. Yay. Okay. Um, Now, before we get into the lion method, it's 9 o'clock, 9:03 in the morning here, Eastern Time. I want to show you, this is what I call the BOSA system, B-O-S-A. And that's an acronym for buy one, sell another. Now, not many of you, maybe you have. Tell me if you've heard of a spread trading system. Now, we've all heard of spreads. Now, spreads have a couple different definitions. A spread is the difference between the bid and the ask on an instrument, right? So what's the spread of, the YM right now? So between the bid and the ask price. But that's not what the spread is in this indicator, not what we're talking about at all. What we're talking about is spreading one instrument against another. Yeah. So what you do is you buy gold and you sell silver, for example. Now, gold and silver are somewhat correlated, and that when they're trending upward, they're both trending upward. When the trend is downward, they tend to both trend downward. So they're paired together. And that's because, they're both precious metals. Perhaps some of them are stores of value or, signs inflation hedges against inflation. So as macroeconomic events occur, these instruments tend to move together, right? So what you do is you buy one and you sell another, and you profit from the difference between the two, not each one individually, but the difference. Now, this chart here is a BOSA chart, and it's plotting that equity difference, the change in equity. So if I go long in gold and short in silver simultaneously, this is what your equity curve looks like. And that's what the blue bars are. I've got a little moving average on it, and I've got some other details around it. So um, what we're looking for is extreme moves apart, extreme moves, divergences between the two. Because when they diverge greatly, they tend to converge later. So the idea here is to look for these extreme moves apart and then buy the spread, quote unquote, buy the spread. Does that make sense? Or sell the spread. So let's take a look. Now this is today's chart. Not too much huge divergence. When I'm talking about a big divergence, we want something that hits either the gray bands, these are gray volatility bands, or the green channel is just an equity difference between the two. So the first equity curve is the grid here. If you look at the word grid on the left, 750, 1000, 1500, and 2000. That means the green line, the first green line, is a $750 difference between the two. So when prices hit the green line here, they didn't yet, but if they did, that would have been a $750 difference from the average. Okay, the average is this mid gray line. And the idea is once we get $750 apart from one another, we look for a convergence. So we would, if it hit the low side, we'd buy the spread. Buying the spread means you go long in gold and short in silver, and you wait for a retrace. Let me show you an example where this paid off really, really well. And this was yesterday. So here's yesterday at the 8:30 news announcement. I did a couple of trades that worked out perfectly. So here again is the spread between gold and silver. Right here we hit this green line. That's a $750 difference. Okay. It went down a little bit to about a $1,000 difference, and then it shot up. So riding it from this entry up to here, let's find out how much, what's the equity value there. Draw the line. From here to here, refresh this, I think I need to refresh. Give it a second, because it does take a little bit of time to chew through all that data. Here we go. Okay, so it does print the value. So from here to here, my measurement tool shows this is an $859 move. And what we're doing is we're buying an extreme move, and we're waiting for it to revert. I also went long here on the spread. And I did get out pretty nimbly. I got out here, and that was about a $700, I think it was about a $700 gain just in that move. Now, I stopped trading it at that point because I did so well. But look at this big move down here. So it moved, and right here you'll notice this is a Leto channel signal showing that gold is oversold. It's greatly oversold. Now, if gold is oversold, you want to buy gold, right? If it's oversold, you want to buy gold. And that's what buying the spread would have done, because gold, the spread leg is long in gold and short in silver. So if you bought gold and sold silver here, your gain was up to $2,000 if you rode it all the way to the other edge. So it's a very interesting way to approach the markets and limit your risk, because rarely, if ever, has gold, silver spread gone below this level. Let me bring in here what the red line here and the green dotted lines are. Very similar to Leto channel's idea. And this is volatility bands. So during this time of day, the gold-silver difference has not, only about 90% of the time has it hit the dotted level, and none of the time has it hit the extended level. So this is the farthest reach it's ever been. And you ride this up. Again, it's an overbought, oversold concept in the spread, in the difference between the two. So again, you're buying one contract, you're buying gold, and you're selling silver. Now you can do the opposite. Okay, you can sell gold and buy silver, and that's what you do up at this level when we're extremely overbought. You sell the spread, and then you profit when it goes down. And selling the spread means you're selling gold and buying silver. So this is a spread trader, and it handles all that for you. all that kind of ticky-tack, which one do I buy and which one do I sell? So you can buy it when it's low, and you trade it just like a regular chart. You trade it just like a regular instrument. Um, and you can sell the spread or buy the spread, and that's what these buttons do here. Now let's take a look at another day. So here was another big day. This was the 14th. We saw a huge move up, and the difference between the two here. Clearly, massively overbought. So that means gold in relation to silver, gold went up and silver went down. Because if you're long gold and short silver, one went up, one went down, or one went up bigger than the other one went up, or something like that. So the long leg was up big compared to the short leg. And clearly selling the instrument here, the spread, is a huge profit. Right? If we had done there from there to there, that's an $867 move just to go to the midline. The midline. Going down to here is a huge move, $1,400. But definitely an interesting way to trade two instruments together. Now you might not realize this, so let me give you an idea. Whenever you buy something with dollars, say if you buy a car or you buy a house or you buy the YM instrument, you're actually spreading two things. You're selling dollars to buy a car. So if dollars become less valuable, right, if inflation hits the dollar, that's a good thing because your car becomes more valuable. It takes more dollars to buy that car. Same thing with a house. Same thing with a YM. So you're actually always spreading one against another. You're either long the YM or you're long dollars. So spreading isn't a unique idea. It's whenever you sell something to buy something is a spread. Just something to think about. When we bought the stock market, if you bought the S&P 500, the SPY, let's say, a lot of inflation affects the value of a company and or an asset. And inflation is a downward pressure on currencies. So inflation means each currency is less and less valuable, so it drops in value. And so a hedge against inflation, a hedge against the falling dollar, is to buy an appreciating asset. And that is exactly what a spread between the two is. Just an idea to kick around. Let's take a look here. And let me point out another thing about this spread indicator, BOSA. The red dotted lines and the green here, they show that typically this spread between in this minute of the day shows the location of the spread in relation to the long-term moving average. I believe I've got 100 period MA here in the midline. So this is interesting. The spread has usually been above the 100 during this time of day. It dropped down below it, $750 below it. And it's typically above it during that time of day. It's below it. Again, this is like a divergence in value or an expectation. And this is where you would buy the spread down. When you hit these green lines, you hit the green dotted lines, and that is an oversold condition, and you definitely would have profited at least $750 there. Now this is a time when the spread is usually below the 100, and it was certainly above it quite a bit. You would have sold it right in this area where we hit the $750 line, and you could have exited here or at least done break even. Holding it, shorting it here, of course, would have been probably a targeting down in the moving average area. Now spreads are not. They could be prolonged move against one another. There's no doubt about that. And you need to be a good trader in order to trade them. But the tools are here. The tools are here for you to do that. Take a look at this big move against it. Now, gold was dropping during this time of day. This is a chart of gold. So gold was dropping, but the spread was rising, and that must mean silver was dropping fast compared to gold when the spread went up in value. Matter of fact, why don't we let's add silver to the bottom of this. Yeah, let's do that. And I'll show you how that looks. So here we go. Now we've got the two charts together. Give it a minute to calculate. All right, we got to go back to that time. Oh yeah, see right here, to give you a little bit better picture of it, silver tanked very quickly, very strongly against gold. Gold didn't move much at all. The value of the spread went up because you're short silver, which is a valuable move, and you're long gold, and it just trickled up a little bit. So the spread value went really crazy. And do one thing here. Yeah, so look at this. This again is Leto channels, and it shows that the silver market was severely oversold here in relation to itself. So what you would have done here is seen that value here, see that it itself is a severely oversold situation. So you want to buy silver. Buying silver means selling the spread, and that's where this value really took off. So selling the spread would have done very, very well in that market, in that situation, in that setup. So this is the one we were looking at a little earlier. Gold is dropping, but silver is dropping more rapidly with greater equity move. We start seeing oversold in silver here. We don't see oversold in silver and gold here. It has or overbought or oversold, either one. So we do see it come in here. The two diamonds, the red diamonds show up here. But this situation with silver being oversold, you want to consider buying silver. And buying silver means selling the spread. Kind of a fun idea, something to think about, kick around, and did very, very well with the spread system the other day. Hi Waldo, how you doing? Thank you for joining me. Hope you're still with me. We're covering the BOSA system, buy one, sell another. Okay, so let's go now, you guys. I know you all want to take a look at my Leto channels and the Lion system. So let's move over to looking at some Lion charts. Beautiful setup right here, guys. Leto channels is the pinstripe. Going short when we hit that channel line, the 90-10 line in the micro NASDAQ, definitely had paid off pretty well in the short term. And the day is young. So there's a good short here. Let's bring this one into view. So I've got signals turned on. Signals are these red background stripes. So you're looking for a move downward. There's a couple of criteria for it, but going short at the signal would have been played off very well in the YM here. This one, a little bit. There's definitely some profit opportunity there. This one, prices retraced back up into overbought, and you, depending on what your stop was, maybe not so profitable here. Here, a couple little moves before we got into the morning, current time. Let's go back and take a look at heating oil. Now, this market has been doing some really great things in Leto channels. I'm finding that in the mornings, we do get some really solid signals I think we should consider opening up a early morning heating oil channel because this is done really well. Look at this guy. So here's an oversold situation. We get a good break upward and we get a signal to go long right there. This is a good size move, folks. If we went long at the signal, got out at the 100, that's a $319 move per contract. $319 per contract. Look at this one. So going long, well, we didn't get a green background stripe, so let's not consider that one. But there was a couple of dollars here. The max move was 172. At least it would have broken even. All right, this one didn't play out very well. This one had a little bit of move, perhaps a break even. But let's go back to yesterday. Look at that beautiful move. Two beautiful moves in heating oil. Three actually, right? Got the high of the high bar here. We got the nearly high bar there, and we got prices retracing out of the overbought zone. These are big moves. Well, really powerful. This one probably would have been a loss. This one was certainly a winner. This was a winner. That's almost the high of the move. Again, depending on what your risk parameters are, your stop is. That one was near the end of the day at 4 o'clock. This one, market moved against it pretty quick. It hit the 100% line down here and retraced up. That would have been a good move. Right here's another buy signal, green background. Probably would have got stop, break even. Here's a good overbought region. We don't get the background strike, but certainly a good chance to go short here. Here's a great buy setup. But these are some big moves, and heating oil is a very high valued contract. You get $4.20 per tick, and it's, you know, got a moves great amount of ticks per day. Like this is a 177 tick move for $700. It dies out near the end of the day, so you don't want to be trading too much near the end of the day. Its big moves are usually in this time of day from 6:30 to the open at 9:30. That one just kind of drifted up. Good moves around noontime. There's one that was a stop, two that was a stop, and three that was a winner. Look at that, right up to the 90-10 line and tanked. This was 10th of July. So a couple of good moves in heating oil. And let's take a look at crude. Oh, that's one thing we can do, guys. We can spread BOSA. Let's go back to the BOSA chart. You can spread any two instruments against one another. Okay, this is just gold, silver. There's commodity like agricultural spreads, spreading soybeans against soybean oil, for instance. Certainly anything else. You can do currencies. The 6E against the 6B, let's say, or the 6E against even the YM is a good spread, or the ES. So you can spread a currency against a equity index future. You'll be surprised how the 6E moves in relation to the US stock market. Let's spread, just for the heck of it, let's spread, what should we try? Let's see how the ES moves against silver. So we're going to change this to ES. So the BOSA chart now is going to adjust. ES will be on the top and silver will be on the bottom. Still calculating here. A lot of data, a lot of calculation going on. So this will be a chart of long ES, short silver. One other thing too, while it's doing that, do you see the V dollar ratio? Now that's something to think about with this instrument. And what it's comparing is the daily move of the ES high to low against the silver market daily high to low. And what it's telling us is that silver, the value of a silver move in dollars from high to low is pretty big compared to the average move high to low in the ES market. So it's saying that we should really be trading about 1.5 or 1.6 ES contracts for every one silver contract that we trade. So it's an attempt to equalize the two based on a dollar value. Okay, based on a dollar value. Like if you were to spread a very small moving instrument like 6B, it typically doesn't move very much, or the Swiss 6S. It's hard to compare those against a big mover like silver or gold, because one might move $1,000 vertically, another one might move $3,000 a day vertically. So the idea is to equalize those two. You want to trade a few more of the smaller movers in order to come and compete with the larger mover. And this little dollar ratio is a way to do that. Is a way to calculate that. All right, well, let's take a little bit of time here. I'm going to refresh the chart. Oh, there we go. Okay. So again, here is the spread of the two ES against silver. Again, we have our $750 band, $1,000 band, we have our $1,500 band, and a $2,000 band. And you can see when we hit the $1,000 band, we certainly had a good sell-off down to the midline. So this is about a $900 move in the two. Big day yesterday. This is yesterday's chart. Again, once we hit our overbought level, which is the dynamic volatility bands, definitely a good shorting opportunity. Massive move. Wow, this is a big one. Let's do a line all the way from here down to here. $2,000 move in that spread. Some of you might wonder what the green dots and the magenta dots are. Those are actually just a simple CCI calculation based on the spread value on the blue bars. So you can use that if you like. I don't usually use it too much. It gives me a little hint of overbought, oversold. And you know, it's a CCI indicator, so it's more standard. And we're looking, again, mostly these instruments are big in the morning. That's when adjustments take place or news affects one more than another. So you want to focus your trading on spreads in the morning. Now, with spreads too, longer term spread trading involves seasonals. You'd be surprised how seasonal factors affect silver, gold, the agricultural markets, you know, livestock, grains. And so you can hold these for a longer period. Most spread traders hold these trades for days or weeks as the spread historically moves against one another. This is just intraday, so we're just holding this for a couple of minutes to a couple of hours, and we're not interested in longer day holding. But the concept is the same. The concept is certainly the same. Now you might also take a look at seasonals of one versus another, and you can tell from the seasonal, are we supposed to trend upward in the seasonal? Like there's a whole website called gosh, I forgot what it is now. I have to look it up. But it's spread related, long-term spreads of the value of one versus another, and you can trade based on seasonal direction. So if you think that, or if you find that 90% of the time gold moves positively trending against silver during the weeks leading up to Christmas, then you would be looking for oversold situations in the gold-silver spread and buy them on dips. Okay, I'm talking a lot, guys. If you have any questions, I would love to have you pop them in, all right? Now, let's do something fun. We have the ES at the top. Let's change the short leg to, from silver, let's change it to the YM. So we're going to trade the ES against the YM. And let's see how that looks. Might take a few seconds to load up that chart. So we're not on silver anymore. We're going to be on the YM. So that's right. We're going to go long silver, long ES and short YM. So how does that look? So one other thing too, when you buy the spread or sell the spread, you're actually buying or selling two contracts, right? So there's you need to consider that in your margin calculation. You're buying ES and selling YM, so that's two margins. You know, keep that in mind if you're doing, if you're concerned about your margin or if you're in an prop firm eval. All right, so the $750 line is just way out. The spread between these two just does not hit that level very often. So we can adjust that. Here's one that came close though. That would have been a great short opportunity, right? So it's an extreme move. I would tighten up the 750 just a little too much. Here's a good hit of the 750 band. And the market does settle lower. Holding it from here down to the close would have been a $423 move. So that's pretty nice. But let's change those values from 750. Let's cut that down to, you can adjust that here. So let's go 300. Let's go 600,000. I don't think we'll get much more than that. So let's just do those. So we're spreading the 500 ES stocks against the 30 Dow stocks. And here we go. So here's a $300 band that gets hit. Once we exceed the $300 band, look for a break up back to it or somewhere around breaking above that moving average, right? And we trade that into the midline. Yeah, the channel period here is $200, 200 period MA. So that's what this midline is. So there's a 200 period average of the spread. Um, Here we just hit the $300 mark and it retraced back to the midline. Here we hit the $300 band. We see a little bit of break upward, right? Looking for maybe a hit of the MA, and we trade that. It kind of went flat here. All right, that was a volatile move at the 9:30 open. Just going short at the $300 mark, close at this midline is a good trade there. This one just hit the $600 level. The volatility band showing that it's a good size move. Shorting that is possible, at least a break-even trade. And near the middle part of the day, might not be a good time to trade it because we're getting into less volatile activity. The market does eventually correct. Kind of an interesting move there, right? So we went from extreme overbought up here down to the close. That move alone, $439 move. So the good part about it is you're not going to risk a lot. You want to mitigate your risk. Spreading two instruments, one against another, is a classic way to reduce your risk. Again, since these instruments are correlated, since they tend to move together, you basically can trade without a stop loss. That's the key. That's a key point. Now, do you want to do that? That's really up to you. I'm not here to say one way or another. You can use a stop loss if you like. But the idea between a spread is you want to find two correlated instruments and trade one against another, and let the market forces bring you back into center. BOSA is the only spread trading system that I know of for the NinjaTrader environment, and it is available from my site there, store.sbgtradingcorp.com. Very good move here at the open. So we went right to the 9:30 open, shot up, sold off, went back to their average. So they reverted back to the mean of one another. Nice move. So you can see also at 9:30, the volatility bands, the red lines and these green and red lines down here, show that the volatility of the spread expectation is way up here. Today, this day, which is the 8th, is that the 8th or 6th of July, the volatility just wasn't there. It just was not there. It didn't hit those band levels. You want a good size move of one against another. Like here, we just hit this overbought band. We just hit the 90-10 line here. Those are interesting times to trade, right? Okay, that's it. We're running out of time. Okay, I'm having some weird data issues here with the YM. There we go. Look at that. We hit our 90-10 line here at the open, and a great time to short it. Again, this is a move for $400 move on the spread. With BOSA, in order to draw the difference and calculate the amount of equity difference, is you just hit the F2 key, which is a line segment, and you draw it, and BOSA will calculate the value in dollars. Oh, that brings me to one other point too. On the right side, the axis here is actually raw dollars. Okay, so if you bought the notional value of the two is what we calculate. So if you're buying the ES, you're buying what is it, 20 times the index value or something like that. I forgot the details. So 62.92 is the price, but if you multiply that by 50 or something, or 20, that's the notional value of that instrument. You're actually controlling a large amount of cash based a large amount of value, the future value in cash at that price. So I think it's 50 times the index or something like that. Same thing with the YM. So what we do is we calculate the difference in notional numbers, and that's the raw equity change in the instrument. And that's what we're plotting there. So one other thing with BOSA is that the two dots here are the bid and the ask for the spread. So the bid is down here, the ask is up here. It's a little hard to calculate now because there could be a wide spread in each instrument, and there is also the timing of it. These are all market orders too, so you could have slippage. So BOSA gives you the worst case scenario, generally the worst case spread difference between the two. That's something you do want to consider when you're trading spreads. You could certainly limit in and limit out of a spread if you wanted to. So you eliminate your spread loss or your slippage. But it's a little trickier. Okay, you gotta be nimble. Like I could sell ES right now and I could buy YM, and that will get me into this spread. I could do that individually. All right, let's continue our look at BOSA's Leto channel signals here. I probably bent your ear enough on the BOSA. Silver is oversold, guys. So silver is oversold. Beautiful trade here. In silver at about 7:15 in the morning. Copper hit a very nice overbought level in Leto channels. Signals were right on the money in copper today. Look at copper. 550. What is the current price? 550.65. Amazing. Trump tariffs have really changed that market. Here's live cattle if you're a live cattle trader. Let me bring in, this is soybean oil, and this is soybeans. Good buy setup down here in soybeans, guys. Look at that. And sell earlier in the morning. Buy here at about almost 6 o'clock in the morning. Almost hit overbought. It's a $275 move, one side to another here. Tendency histogram is showing a good, strong tendency downward for the next couple of hours, really the rest of the day, but we're overbought almost in soybeans. And that's about it on that group of charts, guys. So I would love to hear if you have any questions about BOSA. Yeah, drop them in the comment box, guys. God bless you today. I really do hope you're having a good week and day. The 4th of July holiday was really, really busy for me, and I'm finally catching up. So thank you for your patience. And we're going to try and rejoin here today, this afternoon, do some afternoon trades, and we'll look at BOSA as well at that time too. But we'll close it out to the end of the day. So I'm hoping to be back in time to visit you again, guys. So, all right, well, we're going to wrap it up for now. It's been great to have this time. Thank you for joining me. Thank you for watching this, if you're watching this in the future. Drop me a line. My name is Ben Leto. Again, you can reach me at sbgtradingcorp@gmail.com. Also at ben@sbgtradingcorp.com. Some of you are wondering what SBG stands for, and I want you to know, I'm proud to say it stands for Saved by Grace. Because Jesus Christ loves you. God loves you, and He died for you. And it is by His grace that you can be saved. So I want you to know that. I wish you all well in your trading today and in your business. Say hello when you get a chance. Love to hear from you. God bless you all. Have a good day.